buyer buys this property. He now owns it, he has a title insurance policy, the city's come out, they've done their inspection, and there was no zoning violations found, or few, they were corrected. He goes to sell the property. Now some new violations have come up that were not the result of the seller.
Yes.
We're going to be closing escrow in 2 weeks, 3 weeks.
Okay, sure.
As long as he owns this property, he has a claim with his title, but now he doesn't, will title act that quickly in 2 weeks to clear this up?
So the sellers,
Or you close escrow,
well,
and is that over with?
the seller will presume had the homeowner's policy.
Yes.
And all this stuff is coming up now, so he has protection. So
Until,
his insurer will be protecting the seller.
yes.
Now, if the seller had the standard policy, he would not have protection for these things. He'd be on his own. And so then, we'd be back to where the buyer would have to disclose this to the title insurer and make sure he still gets the policy if he wants, that sort of thing. So as long as, it doesn't matter when it arises, if something's discovered while that seller who is insured by Ace One Title Insurance Company with a homeowner's policy, he can look to that insurer to make him whole. It's going to be a little dicey time-wise as far as what can happen, but they will cover him. He has, so he would want to notify his insurer immediately.
And still have that coverage if it is a result.
Yes, and just keep in mind too, most of the governmental regulation ones, in fact all the governmental regulation coverages and homeowners have maximum liabilities and deductibles, so the title insurer would probably just pay him the $10,000 or the $25,000, whatever it is. Pay the maximum and say, here you go, that kind of thing. But the other thing you have to remember with the claim is you have to prove a loss. So that's a little difficult, but clearly if this transaction's not going to close because of it, there's a loss right there. So there's many steps to it, but the insurance company will protect that seller.
Or the cost to correct those.
Yes, yes.
And the insurance, let's just, again, continue. We basically have two title companies here. So if when the buyer bought the place, he went through, I'll say First American Title, got the policy. Now we're in escrow, now the buyer's not the seller, the violation comes up, we're insuring it through Fidelity, and now there's going to be a claim. Now, you go back to the original, who originally gave the policy?
Yes, so the
even
seller's protection is coming from whoever insured the seller.
Okay.
So the seller's umbrella is his insurance policy. That's just covering that person. And the buyer will be getting perhaps a different insurer. And yeah. All right. So we have other stuff we want to talk about, but let's continue.
I'm just trying to get an idea. Is this like going to battle to get this? I mean, is this something that is an easy process when you have a claim, or you're going to be wrapped up in this for months and months to get the money?
I'll give you a really, what I think is a helpful but brief answer to that. And one of the reasons you want to choose a title insurer too is you want to pick someone who really is thorough. Because my experience with claims, and I started in the industry in 1975, is that it's a painful experience. And it's painful just because it's stressful for the person who owns the land. And the work I do now as a consultant, I will help people who have problems. And I see the emotional reactions they have to the things that affect them, and it's terrible. So hopefully your title company does thorough work and you have peace of mind. But in today's world, claims are harder to succeed with than in the past. And up until probably 2008 or so, title insurers were very concerned about good faith. I mean, that's a major driving force in claims handling. So if it were a close call, you're going to pay the claim. And also you want these people to be your customers. Those of you who are here, and Jules Brasser was in town, the most important thing to him was the customer. And so if the insurer, which was always a good one, was balking, Jules would always persuade them, look, this is more important to me than the money that we set aside. Maybe as the agent, I'll dip in more money if I need to, but let's settle this thing. That's not the world today. The companies are owned publicly. They're responsible to their shareholders.
Their board of directors.
And they've had a lot of claims these last few years because of the economy taking a big dive. Now, hopefully we'll get back to good faith again, being the driving force. But right now, it's if you can deny this claim, do so. And I'm not criticizing the industry, it's my industry, but just so you know. So we hope not to have claims. And I know there's more questions about this, but what that causes me to explain to you is with the homeowner's policy, as wonderful as it is, 32 coverages, which are maybe 8 more coverages than the standards 4, are worth that extra 10%, just in case something happens. But this policy, those coverages are all based on assumed risk. Just so you know, there's no due diligence. You know, they don't inspect the property for unrecorded easements. They don't send out letters to utility companies asking, do you have unrecorded easements? They don't have a survey to show them where all the manhole covers and where all the improvements are in relationship to the boundaries. It's assumed risk. And usually that's fine for a 1 to 4 unit residential property. But if you really need to know, if you have a buyer who's going to build something on the site, let's say, or they love this old adobe wall that's so valuable and they just want to make sure it's on their property and it's really theirs. Because we all know how the properties have creek boundaries and there's no clues to where the corners of our land are. Is there another better product? I'm really curious about that. Let's see what this, oh hey, there is! So this is a bigger circle and it's an ALTA, it has that name again, but the CLTA could be the same, but we all know it by the same, Extended Coverage Owner's Policy. Now, this policy, it doesn't seem like it's much more expensive. It's 25% more in standard, 15% more in homeowners. But the difference about this extended policy and what you need to know about that, the big investment isn't the title insurance, it's getting that survey. The survey is the big cost there. But what the surveyor will do, they will go out and they'll identify where all improvements are, from our property, and where they are in relationship to the boundary lines. More importantly, where they are in relationship to the easements. They identify any unrecorded easements based on their survey work that they discover, manhole covers, fire hydrants, signs, bus benches, whatever, it's all identified. They also identify where all the neighbors' improvements are in relationship to our land. And if we have access routes that provide us access to our land, which we often have with the properties in San Ynez and Montecito and even Hope Ranch, to identify the routes. And that's a terribly important thing to be aware of, because if you need to know, that's the product you need. And if there's a commercial transaction, especially commercial buildings being so tightly packed, that is usually what the clients are going to ask for. So if you really need to know, if your client is buying something where it's important to know where the easements truly are, in reference to improvements and so forth, no assumed risks, this is where the due diligence is done, and this is the best policy available, if you can afford the survey, yes.
Can you provide your own survey?
You cannot. It has to be done by a surveyor.
Right, no, I understand. So I had...
And some people will provide us. Here it is.
No,
I'm kidding.
I mean, let's say I have a property and I just had a survey done.
Oh, yeah.
Could I have provided that survey to the company?
Yeah, they can update it. Sometimes if it's current, they won't ask that it be updated. So you can have, so let's say Joe Waters or M&S or Penfield and Smith did a complete survey 3 years ago. Or let's say they did a survey, but they didn't do a survey disclosing where all the improvements are. You could still go back to that same group, and now they'll do the survey to show where all the boundaries are, but also overlay where all improvements are.
And if I can provide my own survey, would that lower the cost of the Alta?
Well, what happens is the buyer or seller will negotiate who pays for the survey, and the title company doesn't charge you for the survey. They want you to provide it to them.
Okay.
So and that's important to know, because the buyer and the seller need to work that out, who's going to pay for it, and then they've got to provide it to the title insurer, and then the title insurer needs to study it, of course, and they will collaborate with the surveyor to make sure everything that should be there is there, because they have certain criteria, and so between the two, you usually get real good ideas of what's going on.
So let's just say you do have a survey done,
Mm-hmm.
and there